Today is Saturday, November 30th, 2019. Today's session title is Breakout, Consolidation, Breakout, Consolidation. And this is your 2-minute drill. Hey, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what is happening in the stock market. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. A friendly reminder that this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email or social media comment section. We just released a new website at gurneyfinancial.com. If you want to remain up to date with when new material comes out, subscribe to our YouTube channel. We're going to transition now into a few household items, housekeeping items, and then we will go from there. So this is our website for prospects, clients that are people that are basically looking into Gurney Financial. Check out the FAQ section. It kind of shows our philosophy, answers a lot of questions that might be helpful to you, but always feel free to give us a call. For clients specifically, the blog is very helpful if you've missed past vlogs, which is what this is considered. So later today, the new one will be up and you can visit previous commentaries or subscribe here on YouTube and it'll be sent directly to your phone. With that being said, we are going to transition now into the 2-minute drill. Your 2-minute drill starts now. So overall, this week was a pretty solid week. Here are your top 3 U.S. indexes, the NASDAQ, S&P 500, and Dow. Pretty solid week. You're seeing, if I categorize this, that risk off also did pretty well as well. I'm going to change this so you can see. You're seeing real estate did get a bid, which is not surprising. Really, you're seeing growth and conservative areas do pretty well here. So keep that in mind. It's a unique environment, but the market is performing quite well. We're going to transition now into the sector performance. Pretty solid week. Again, growth names like technology, consumer discretionary. Good to see that. Just good to see this area get a bid. Real estate, healthcare, more conservative areas also did well. So you're seeing growth and risk off areas do pretty well, with the exception of energy. Not really a surprise there. There's a reason why I don't have a lot there. We've been discussing over the past several weeks this price range. Basically, the 30.90 to 31.30 finally traded and broke out of this range. Here's your breakout. So we're basically establishing a new trading range, which is great price action from a technical standpoint. Here's the whole reason why our session is titled Consolidation, Breakout, Consolidation, Breakout. You had the breakout, consolidation for a couple weeks, breakout, consolidation for a week, breakout, consolidation for a couple weeks, breakout, and we just had a new breakout. Friday was a down day, as you can see here. This is all good price action while holding a very key level, the 10-day moving average. As expressed several times, until we break that, I don't think there's a ton of movement that we need to be making here. You're seeing the RSI got a little bit overbought on Wednesday. It got back to basically 69, which we're pretty elevated here. I'm just being real there. Let's transition now to the next chart. The fear index. This is really important. This is what keeps us kind of cautious at these times. It puts us in a real perspective here. So again, the VIX, clearly Friday, the fear indexes went up a little bit, 7% that day, or Friday. And it's really not a surprise, because anything minor that could show up when there really hasn't been much fear at all, something stupid tends to happen at these levels. It's just the reality. It does not mean we can't remain here for quite some time, like you're seeing from June to October 2018. It can remain here for a long time and trickle higher. When the VIX and the fear is low, the S&P 500 tends to do well. So when, as you can see, the VIX is very low, the S&P 500 did very well. It's an inverse relationship. So we're just being realistic and saying stupid stuff tends to happen when it gets this low, and that happened yesterday. I mean, a 7% move in the VIX. It'll be interesting to see if this surpasses, it did surpass the 10-day moving average, but let's see if we can get past an RSI level, relative strength index of 50. That's something to watch there. Good things tend to happen in the S&P 500 when the RSI of the VIX is below 50. Got to be cautious if this gets above 50. Overall, still trading quite well. Market's hanging in there quite well. Momentum versus growth story. You're starting to see value taking a little breather and growth playing a little catch up, but look at the divergence here. There's still a huge divergence here, still opportunity in momentum and growth names. If this continues, I think the market can hold these levels and go higher. If it doesn't, I think the whole market will probably see a little breather. So just kind of interesting perspective there. Retail is that time of year where retail, this season tends to do well, with the exception of last year, which was mainly caused by the Fed increasing interest rates and that the whole market sold off. But let's see if, you're going to hear things in the news like Amazon. Did they have record sales, which I'm sure they will? That could be a good thing for the retail sector. So again, I don't have a lot in this sector, nor do I want to be really investing in brick and mortar retail. I want to be potentially investing in areas within retail that have a good online presence. The stock of the week is Ulta. We actually do own some of it. It's struggled, but we're going to discuss that at an extended time. So if you're basically in this to hear, basically a quick overview, you can call it quits here. We're going to go into extended time, but let me go into a quick summary and then we'll let you off the hook. The summary is this. Really, a lot has not changed. The fundamentals are good enough to keep the market elevated here. Resilience from technicals has been very impressive, actually. So from a technical standpoint, this is very good price action. We are a little bit overbought, but still remain cautious in being overly bearish or bullish. We will remain disciplined in taking some gains at these times, but in reality, we have about 30% in cash, 40% in growth, and 30% in risk-off areas to try to get interest and dividends. So short term, like I said, we're overbought. That's the reality, but the backdrop is still pretty strong. Supportive Fed and better than expected earnings. Basically because analysts were thinking the world was going to end. So that's not a bad backdrop, and it could lead into further advancement. Until we break the 10-day moving average at 31.25, I would be cautious in doing anything stupid here. Either selling massive amounts or buying massive amounts. So remain disciplined, call with questions, and let us know if we can bring up more, a variety of different stocks and analyze those for you. We're going to now transition back into the charts and analyze Ulta, which a client reached out and said, what do you think about this? Is this a buy opportunity? We're going to touch on that right now. So you can see Ulta, first of all, huge dip on the last earnings. Not a pretty picture fundamentally. That's just the reality. If you're going to get into this is more of a value play to say this is overbought. Full disclosure, I do own some of this. I would be cautious in adding more right now. Stifel just downgraded Ulta on November 25th from 250 price target to 215. Right now it is trading at 233. And as you can see here, it's consolidating quite well. So sideways movement is holding this level quite. That's pretty good price action. From a technical standpoint, it is not pretty. The 50-day moving average is below the 200-day moving average. Not a good sign. Here are two key levels from a technical standpoint that has either been a turnaround and a move up or a turn down. So we're at key levels right here, basically the 2020 and near 200 or 215. So very interesting stuff here. If it were me personally, I would not add until we get past the 10-day moving average, which is very close. 235, which is the purple line, difficult to see, but 235, we're at 233. Maybe you wait till there, or you wait till the 50-day moving average at the 241 level. So again, their earnings call comes up Thursday after the bell, December 5th. So be smart, be disciplined. I think there's better names out there short term. But if you're in for a value play, saying that there might not be a ton of downside movement here, I mean, it could definitely go down as we've seen, but it has been on a serious downfall here. And I don't think there would be probably too much more downside. So realistically, from a fundamental perspective, not pretty. Technical perspective right now, but it is so low at this point. The RSI is starting to improve because of sideways movement. You might get a breakout, better than expected earnings coming up on Thursday. So I hope this helps. Let us know if you have any questions, but we'll probably continue to do a session where it is a 2-minute drill and then one stock that clients ask about. I hope this is interesting. Let us know if you have other stocks you want to talk about. Have a great weekend. Hopefully your Thanksgiving was restful. Don't spend too much on Black Friday. Let us know if you have questions. We're here for you. Thanks, guys.